PM. All right. Welcome to the Call Money Monday. What an exciting time to be alive. Hope you're all enjoying this very productive weekend. There we go. Just wanted to share this with you real quick. Got a quick update to the front page. So GM to that. And in addition to the front page being updated, we also got our channel updated. So big thanks to I'm talking and talking at the same time. Big thanks to Jasmine, because we're getting some upgrades. Check it out. So if you've been missing the calls, or you want to catch the recordings, you can come in here. You come to the Team Elevate page, click on videos, defaults to the latest, and then you can see where we've been at, what we did last week, the week before, and just stay plugged in. This is before I went crazy and shaved my hair. So isn't that great news? So thanks, Jasmine, for putting that together, making sure it gets up. And subscribe to the channel. Make sure you're getting all the notifications, the updates. Yep, it's gold right here. Awesome. Speaking of gold, we got some event for build for. Now I put in a request. Now, who knows if it's going to happen, but I asked corporate to change this Thursday, May 15th to Saturday, May 17th. I don't know if it's going to happen. It's my preference that these things happen on a Saturday so that we can get a bunch of guests to them now. If that is the case and we bring a guest there, there's a few rules for building for live education week with guests. Rule number one is you got to have a chaperone there. Either you or an ICM has got to be there to meet them. No wandering around the building aimlessly by themselves. Sometimes in the past, guests have wandered upstairs while customer service is working or where other people are working. It can't be happening. So your guests are chaperoned. Second is they can only come for half a day. Okay, there's the AM session and the PM session. At lunch, we rotate guests out. If they want to stay or come all day, they got to pay. I like that. If they want to stay or join us all day, they got to pay. GM to that. And rule number 3 is guests don't get to ask questions during the recordings. Questions are reserved and a privilege for the paid students. So we'll put the paid students in the front, and the guests don't get to ask questions. Guests can only stay half the day, and guests must need a chaperone. Now, this, chaperones that are going to be there are going to be Richard and Mitch, right? So give everyone a heads up that you're going to have some guests there. Now, obviously, do your best to be there with your guest. So that at lunchtime, you sit in the lobby and you say, it's time to sign up. Wouldn't it be great if you were a part of this and you could ask questions, you could be here all day? It's only 26 G's. And think about that. We've had 30% inflation in the last 2 years. So 26,000 is really only like 18,000. It's not that much money. Now, we shouldn't be happy that much inflation occurred. In fact, we should be outraged. You guys probably don't hate the government enough. Just putting that out there. The government does great things, but one of the things they don't do well is rob us quietly of our funds, which is why we do state. So check the calendar real quick. Clear the filters. Don't you know, pump it up. We got to pump it up. So ATM starts this Friday. Awesome. You know what's that? So you can stream it live. You can also attend it in person. So we got some property tours. Missouri, Ryan Dodge. What do we got here? Who's running this? Ryan Dodge is out in Missouri, huh? Good for you. If you guys don't know Ryan, you should check out his property tours, his workshops that he does. He's done over 200 deals. I think he's up to 250, something like that. Very productive dude. Does a lot of big deals, apartment buildings, things of that nature. So check that out. Then we got Richard Stock and Fernando. Got the Spanish property tour, English property tour happening at 8 o'clock. They're in Utah. That's going to be awesome. Out in Harriman. Remember when Harriman used to be like Nevada? And we were like, whoa, you're going all the way out there, huh? Denver study group, right on. So Esther put up, and it looks like Amram is going to be running the workshop, Cherokee Street. Now you've out there, I don't know if you've been paying attention. You probably have. There's been a stagnation on housing pricing. In fact, that's something I want to do for some numbers real quick. Just so we're all aware of the next 90 to 180 days for pricing your real estate product when it comes to attracting a buyer and not psyching yourself out. Okay, we got some more workshops. Sharon's has been awesome. Steve Namora, Team Elevate North with Tamara. Check that out. And then we got the big stuff on Thursday. We got the meeting with Mitch and May, 6:30 Mountain Time. Be early. 6:30 is when it starts for the networking. So be there at 6:15, 6:10. Grab welcome guests. One of the things that I'm trying to get to have happen is when the guest gets out of their car, that one opens the front door, someone hands them a name tag, someone opens the other door, and someone walks them to their seat or walks them to the snack table or walks them to another guest or another ICM and makes the introduction. Okay. The more ICMs we have there, the easier that is to make happen. And when guests have an experience like that, they go, well, dang, they must really care about their people. People enough to volunteer and make things happen magically in a magical way. It's something that they're going to want to be involved with. Then it looks like there's a property tour workshop with Dave Clark on short-term rentals next Tuesday as well. So that might be great to attend. Cash flow game night in Vegas. Awesome. Vegas team is growing. And then some property tours all on Saturday, a few online, and Denver's got their in-person property tour with Earl Co. That Earl guy, the genius. Kendall Stocks guy, his briefing in Idaho. Cool, guys. This is going to be a productive week. Now, if for some reason you didn't make 10 grand last month, I know it's weird. Some of you didn't. You got to consider why. Or if you don't have 10 in the pipeline in the next week or two to get paid out to you, then you got to sit there and wonder why. Renatus has had one of the most productive months of the last 5 years last month. And if you didn't make any money last month, you're not doing something right. I don't know how else to put it. You know, you got a head, you got a great energy, you got great intent, but there is something else lacking that you have to do correctly in order to get paid these big checks. So we will go step by step, every piece covered, so that you're getting benefits of this program fully, not just education, but the marketing too. Richard Stock's going to be doing a 5-Friday training schedule on how to generate leads, how to close, how to find the dollars. I mean, one of the best questions for closing is, if I could help you find the money for little to nothing out of pocket, would you get started right now? That's a great question. But they know how to find the money, or at least where to send them so they can find money. Maybe we need to make a finding the money. We need to make a find the money of a YouTube channel video. GM to that. Okay. We'll either make a separate one, or I will make it next Monday's episode. Okay, now I wanted to go into the whiteboard. Anything else on the schedule you guys want to promote real quick? And actually, Gilda, if you're in a spot, we're curious about how your Chicago event went on Saturday. If you have a second to tell us, or you can come out later.
Um, yeah, hi, good morning, everybody. So, are you talking about like the in person, or with Randall Cloud? Is that what you're talking about?
Yeah, how did it go?
Yeah, actually it went pretty well. I mean, obviously it was I was online, and because it was like the Black Friday being a day before Easter. So, so I was but there's like there's people that in person. It was for both. It was in person and also online. Yeah, it was great. It was an awesome awesome event. And I learned something being the short-term rental. So being an operator of a short-term rental, so there's things that like we didn't know or knew. So it's always important, to be able to plug in, all the time, because you never know when the changes, is going to happen. And then the instructors are actually, they're the first one to know and let us know what changes from our education. So even for people that were there that been operating since 2018, like Bob Tierney, and he didn't even know some of the things that he heard, like what Randall was talking Saturday. So
Yeah, like the marketing.
yeah, the marketing, his
The,
system, like the system that he's using, and he's also changing, and things like that, platform. So he's adding one platform. So he's now into Expedia, which he just started, I think, the last couple of weeks. And so there's like pros and cons, using like some platforms and stuff. So it's really important, to stay plugged in. I've never missed, Super Saturday or intensive. I've been in for 9 years, and I always attended it. So never miss it.
hey,
So because you never
never
know
miss it.
what event is going to really, take your business to the next level. So is that good or
Okay. Yeah, yes. Just to
okay?
board and unplug my thing. Can you hear me okay?
Yeah, yeah.
Okay, cool. So Randall gave us some updates. By no means are we telling you to go out and set up a short-term rental. Okay, it was get the info, see if it's right for you. I don't like them. I have them, but I don't like them.
Mm-hmm. Yeah, I hear you. I hear you because I'm a long term, but I do I'm actually using like one right now. So, but yeah, there's a lot to do and all that. But I guess it depends upon, again, it's back to what your investor ID is, and that's why it's so
Exactly.
important to know what you what
Yep.
what what challenge you want to solve. So yeah, it's
Yeah,
it was
exactly.
awesome.
And what's crazy, I've been looking at some charts, and this is one reason why I'm going to bring up doing a little bit of math here with you guys, is that a lot of people who were doing short-term rentals, because of the fees that have changed and the availability, right? Like there's way too many on the market now in places like Phoenix and um, California, Miami, places like this just flooded. These people that bought a house went to do a short-term rental. The value of the house went down. There's less customers going in, and now their cost to maintain it um, is breaking. They're not making thousands of dollars a month. They're making hundreds of dollars a month. And now they're scared. So what do? Now they're trying to liquidate it. So they go put the property up on the market. But then if a bunch of people start putting their property up on the market, what happens to the price? Does it go up or go down? It goes down. And then it sells, but it just sold for lower, which changes comps. So all the rest that are listed now need to adjust and adjust and adjust and adjust. So if you're going to do short-term rentals or something like that, you got to be in it for the long haul or don't do it. Okay, so here's what I mean. Um, okay, for those of you who are like, well, I'm not good at math, you better get good at math. Math is the money. Okay. But you like the money. So if you like money, then you need to start saying, I like math. We're going to do a reassociation here. Math is good. Money is good. Check plus to both of those. All right. So let's say you are doing let's say you're doing a fix and flip. Okay. And I want you to have a proper expectation so you don't get hosed. I'm telling you, too many people are not in our community necessarily, but out in the retail speculative space, they are gambling, and I don't like seeing gambling, so I don't want you guys to copy it. Let's look at it for real. If the average cost of a single family house in a metropolitan city in America is approximately 400,000, let's just go off of those numbers, okay? So if man, I gotta bring up some charts and show you guys. And we need to get Chris Wilson out here too, because that guy loves talking about charts. Now, let's say to be competitive, you bought this house for 250,000 purchase price. You put repairs in at 70,000. So now you're in at 325, and you're going to sell it at 400, and you think there's 75 G in there. But if we're not factoring in all the costs, so at 400,000, right out the gate, we got a minus %, right? Because we got the agent fees, which are they're being questioned in a big way now. Some people are suing the National Association of Realtors and all these different things about a listing agent that just puts a sign in the yard still getting 3%. So we'll see where that goes. But right now, we'll factor in 6%, which like I know Dane says he's not good at head math. He's still good at math, but he still knows how to do the math. 6 times 4 is what? 24. So we got 24,000 right out the gate for agent fees. Then what people aren't considering is the entire market in the place you're selling is down 3%, which is man, because of the money printing that has happened in the last couple years, and it's driven the price from 240. I remember the old price was 240 about pre-pandy, and now it's 400. That didn't happen because real estate got more valuable and better. It happened because of money printing. And if you're not mad about the money printing, I don't know how offensive this form of robbery is. So I'm speculating. I do have some charts, but I need to, before I go in and well, I'll pull some up at the end. But this 3% reduction is because the money is slowing. Tariffs are happening. Tariffs suck in the short term. They're going to be good in the long term. Now, what is long term? 6 months? Maybe not. 1 year? 2 years? Yes, we'll see an adjustment. It's going to be great. But in the short term, I get it. The tariffs suck, which is stagnating some of the market. And people are reluctant to buy. Have you noticed days on market have gone up, which is another factor? Days on market has gone up. So you need to be adjusting for this. I'm not saying don't do real estate. I'm just saying be aware of the fact. If you were planning on 30 days on market, but that's a 90-day-old stat. We didn't have crazy tariffs, and we hadn't done the inauguration. Well, I guess it's now been exactly 90 days, right? It's January 21st. Yeah. Okay. But if days on market are now up 20% or 30%, all of those holding costs are now affecting you as well. So we got days on market up, we got market slowdown. I'm saying that's going to cost you an additional 3%. Okay, so what does that cost? Well, there's two ways to do it. If three is half of 6, we can do half of 24, or we could do 3 times 4, which is 12, and get to the same answer. We now just, if you were banking on that 12,000 being yours, it is not yours. The inflation is eating it up, days on market is eating it up, and slowdown in the market is eating it up. So don't psych yourself out. That's why we're doing this. The other thing to consider too is that with the money printing that's still happening, but the interest rates not dropping, right? We're supposed to have a Federal Reserve. Last Wednesday, the Federal Reserve had a meeting. They didn't drop the rates. They're going to have their next meeting in May, and we may or may not see rates drop. More than likely, we will see them drop. But if they don't, then the days on market thing is going to get worse, and people are going to lose even more money waiting. And I don't want that for our team. So if you thought that you're going to be able to sell it and maybe, sell it right at 400, and then you got to be competitive, now you have to drop another 1% so that your property looks nicer. If there's 10 properties on the shelf and you want yours to come off the shelf, and everything else being equal, but you're dropping yours is 1% less, that's another 4,000. If someone goes, hey, I got a little bit of equity if I buy this than if I buy from that seller. So now 6-1%, take 10% right off the top, 40,000 off of 400, we're selling at 360. And if you were all in 325, now you're making 35K. When you thought maybe you were making 45 or 50. So I'm just saying, as we're going into springtime, and the typical narrative for the last 15 years has been spring is a great time to list. Buyers are coming out of the woodwork. It's going to be fantastic. Don't fall for that. Don't overprice your stuff. Don't hope appreciation will be there for you. I'm going to bring up a chart. I'm bringing up a chart. Now Phoenix has had a lot of activity, a lot of fluctuation, a lot of what should I say? It's a huge market. It's an indication on how the nation is doing. Let's look at this chart real quick. Oh, a Zoom update. Oh boy. Let's see if this works. Okay, have you guys seen this? Let's just take this chart in for a second. There we go. Okay, the housing. Now, Zillow is not saying, Zillow didn't put the words housing bubble in here. Okay, someone else. But the price came from Zillow. In 2007, peak mania, and then for 3 years an unwind. And people calmed down, and now we're pushing it back up, and now even crazier. And one thing I want to remind everyone, if you haven't looked at this, is this is something you should all study. It's called the Wall Street cheat sheet. Okay, but it's not just Wall Street. It's every market. It could be gold. It can be commodities. It could be real estate. Bob Snyder even talks about this in one of his presentations. Right now, look at this. Look at this. So in 2022, peak craziness. Then they print more money. Joe Biden printed $1 trillion the last year that he was in office. $1 trillion. Okay. 50% of all the money has been printed in the last 5 years in America. Half of all the money that's ever been printed has been printed in the last 5 years. Okay. So we're at this peak euphoria thing right here. Thrill and euphoria are happening. We're going to be rich. I'm a genius. Then it drops a little bit. The smart people get out. A few more people buy in, and then complacency. Then it's going to go through anxiety, denial, panic, and capitulation. Capitulation says, I'm out. I'm selling. I'm done. Then people sit with anger, and then depression, and then disbelief, and then it starts back over from disbelief back to hope. But this stagnation and this sideways thing could be 1 year, could be 2 years. This stagnation sideways here was 2009 to 2013 as a 4-year sideways market. Now, again, this is just Phoenix. I don't have all the numbers for Salt Lake or for New York or for Miami. But my point is that you cannot factor appreciation in any of your numbers. In fact, you should be surprised if you're going to get exactly what you list for. I just pulled up another chart for Nashville, which is the biggest metropolitan in my world. And they're saying days on market went from 30 to 64 in the last 90 days. That's 100% increase in days on market. So just be aware. Just be aware. The other thing I want to make you guys aware of is that in order for the Federal Reserve to announce a recession, there has to be 2 quarters, 2 consecutive quarters where there's a negative GDP growth. Okay. Well, if there's negative GDP growth on month 1 and you got to wait 5 more months to be negative, 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 then the government comes out and says we're in a recession. Those 5 months, people are going to be lying to you. The news, depending on who's funding the news channel, is going to say market's going great. This is happening. Everything's fine, to try to interact people leaving the market who got the signal early. Well, what are some signals? Days on market is a signal. It's a big signal. How fast? Right. I remember when I first moved here in 2020, days on market in Nashville was 5 days. I remember playing a game 2018 in Denver. Days on market was like 1. People were fighting. People were bidding 20% over appraisal. They were getting a third mortgage just to buy. Okay, that's mania. If we didn't have the pandy and all the money printing in 2020, we would have had a correction back then. But then we got a money printing president. I'm not saying it's bad, right, or wrong. Actually, I am saying it's wrong. Money printing is wrong. Money printing is theft. But then money printing happened crazy the last 4 years. So what did that do? That made people just justify paying that much more, that much more. Well, it can only happen for so long. Okay. So that print, everyone's getting mad at Donald Trump now because he's saying we're done with the money printing. Now, so that he doesn't completely kill the system, some money printing has been scheduled, but not the same way the last 5 years have happened. And I'm not saying I'm a fan or like I completely subscribe to this guy's philosophy. Keynesian, that's funny to say. Keynesian economics are one thing. Okay, but here's what he said. He said by continuing process of inflation, governments can confiscate secretly and unobserved an important part of the wealth of their citizens. There is no subtler, no surer means to overturn the existing basis of society than to debauch the currency. Whoa. He said 105 years ago. But back in 1919, we were still on a gold standard. It wasn't until 1971 that Nixon was off the gold standard, and then all the money printing just went crazy. And money fled the gold market and went into real estate. So the last 50 years, real estate's been amazing. All the real estate training programs and seminars and everything, they're right. Money is safe in real estate. But money can also, I mean, you see people go bankrupt in real estate as well. So you can't just say because I'm in real estate, I'm good. No. No. You got to be more sophisticated now with the money printing machine slowing down and people trying to figure out how can I save better for the future. More people are going to try to get into real estate. So we're going to have a more sophisticated investor. So watch more of your classes, be more diligent before you just buy whatever willy-nilly deal comes your way. And when we say deal, I'm going to call it a transaction because the deal implies your money. When a transaction opportunity comes your way, you should deduct 10% off of that and say, can I still make money if I have to drop the price 10%? Okay, from my little example I just did. If you can still make money at 10% lower ARV, then go ahead and do it. But if you are dependent on that ARV being that way, second guess, third guess, hesitate, slow down. The other thing to think about is, would you be happy holding that property for the next 10 years as the whole cycle does its thing? This is why I buy the real estate the way I buy it, is because I'm happy holding it for 10 years. Okay. I bought a mobile home park. Crazy. I know. I bought it at an auction. That means I paid the most out of anybody there. I looked at it and said, am I willing to hold this thing for 10 years and still be happy? Same with the commercial property, same with the land. Um, these are things where I don't want to do a fast turn. It's crazy how much I think they said $1 trillion has left the stock market in the last 2 weeks. I'm a positive person. I'm an optimist. But we've still got to live in reality that money is shifting in a big way. And you need to be thinking about real estate's store of value a little bit differently. If you want money quick, marketing. Help people get into rental real estate. Help them do velocity banking. Help them do their taxes and their credit. I mean, a huge way that students get a profit right away or have more money in their hands is through the tax strategy, right? If all of a sudden you go from 35% tax to 10% tax, that 25% is your savings that you go put into real estate to create the cash flow. You got to be I don't know how people are doing it these days, man, without tax strategies. It's crazy. So if you want to make a big difference for people, make money faster, make money with lower risk, do marketing and help 10 or 20 or 50 people get into this program, do velocity banking, do their retirement account structuring, do their credit restructuring, and they'll see more money in their pocket at the end of this year just from those three things. Pat yourself on the back. Hey, I 10, 50, 100 people this year become more sophisticated investors, understand how money works, get safer when it comes to their long-term planning. So, yeah, of course you're going to get 10 or 12 G's for making that happen. But like I said with the chart here, the euphoria, the craziness, people, what does this say right here? In thrill, I will buy more on margin. Got to tell everybody to buy. What does buy on margin? That means leverage. That means that if it goes down, it goes up leverage, woohoo. If it goes down with leverage, you're losing even more because the loss has been leveraged. So be careful. And then I'm a genius, we're all going to be rich. If you are thinking that, I mean, you're a genius for being in real estate, but you also have to be aware that if the normal narrative out on the news, the street, the world, the market is real estate's just going up and up and up and up, and it's amazing, amazing. You should do it. You should do it. That's the top. That's the top. Okay. So as the market, let's say today, if today's the top and the next 5 years is going down. Now I'm not making that. This is not a signal. I'm not saying that. But what would you do differently the next 30 days, 60 days, 90 days, 1 year? How would your strategy change? What real estate strategies can be profitable during a down market? See it in the chat. What real estate strategies can be profitable in a down market? Okay, we're going to switch over to whiteboard and we're going to make a list. I want you all to be skeptical when people tell you, especially when realtors are are trying to sell you something, or a mortgage broker saying now's a great time to borrow. Depends on the asset. It absolutely depends on the asset. Right? Is it a good time in stocks? There's one stock that's up. One company is up. That's Berkshire Hathaway. Everyone else is red. One is green. If you're looking at Berkshire Hathaway and you say, now's a great time to be in stocks. If you're only looking at the one, now's a great time to be in real estate. Is a great time to be in California, Southern California, retail, fix and flip, high end? No, it is not. Is it good time to be in Kansas or Ohio or the Carolinas where you can get 50, 60, $100,000 houses and you rent them out for 15 a month? Then yeah, let's double down on stuff like that. All right, so I'm seeing some activity in the chat. Let's make a list together. GM, everybody who just joined. Oh, we'll get into that too in a second, Tamara. Okay, so we have notes. We got buy and hold. We got foreclosure, auctions, short sales. Yeah, I met someone on Saturday who listed their house as a short sale. They paid $300 in 2022, and they're now selling it for $260, and they're going through a short sale. Can you believe that? Hello, guys. Pay attention. Tax delinquencies. Subject to seller finance. I mean, when I talked to them, the one reason why I was talking to them was because I was thinking about buying their house. I was like, guys, just seller finance it. And they thought about rents together, and they're like, I think it's just better if we just do the short sale and get out from under it. Oh, what? It's crazy. Seller finance, but they don't want their name to be attached to it for 10 years because they felt that pain of it dropping from 300 to 260. They're in that pain. They're in that part of the cycle where it doesn't feel good. Anxiety and denial are the next two feelings after complacency. So this is one reason why we're going to be starting the buy and hold challenge in June, is because more people are going to want to move to that kind of a flip. I'm going to flip it to a hold. Right? We still buy it at a discount, which is the beautiful thing about real estate. We could buy it at a discount. If you buy a $200,000 asset that's worth 400 grand, you just doubled your net worth on that asset. Guys, this is incredible, but you got to be in the right styles of real estate. And I know the tone has completely changed from a month ago. But a month ago, tariffs were a threat, right? It was just a negotiation tactic verbally. But now that it's been implemented and you can see how people have responded to it, it's time to adjust. So anyway, jump into the classes that are going to be relevant for you. And like things like mobile home parks, where people need affordable, lower cost of living type housing. Tiny houses, mobile home parks, stuff like that is going to be it's going to be where the smart investors move, right? If you think about this, we need an ROI, right? We need a return on investment that is higher than inflation. Okay. We need an ROI that's higher than inflation, or it's not an ROI. Going to the money printing and the robbery. So if inflation is 10%, if anyone has something that they can point to where inflation is lower than 10%, I'd be able to look at it. But right now, it appears as though inflation is 10%. So we need an ROI that is higher, which means we need at least 11%. But in order to, if you're getting 11% and you plan on living off of that money, then next year 11% won't be enough. You need 20% now to make up next year's money well. So if you go buy a, let's say, an $80,000 house, and we're not going to do a completely detailed analysis on an $80,000 house now, but actually Dane did a good job last week on the detailed analysis in this price range. But my point, if you're able to rent, let's say you paid cash for it, okay? You paid cash, no leverage, just cash. And now you can rent it out for $1,000 a month. Roughly speaking, what is your ROI? Well, times is by 12 to get 12,000. And then we would divide 80,000. Whoops. We would divide 80,000 by 12,000. And what is our ROI? %15. Now, of course, you might have a vacancy. There's going to be some taxes. There's going to be some utilities, depending on how you maneuver this 1,000, right? If you're charging electricity and water on top of that so that they're paying for it, then you're going to be closer to capturing your 15%. But if inflation is 10%, you're only getting a 5% cash on cash return, ACR. And you allocated $80,000, and now you're getting 15%, but after the money printing has happened this year, 5%. So we've got to be more diligent. Okay? Be more diligent. Prioritize your competence. Stop watching the news. The news is lag. The news is old. The news is literally only what happened. That's why it's called news. So if you're trying to use the news to make decisions, it's too late, because people made their moves and then the news reported it. So you're going to make moves too late. Your moves are going to be found in the classes. They're going to be found in the study groups. They're going to be found in your live attendance, attending workshops where the people are there in person, your Chicago workshops, your Utah workshops, the Texas workshops, the Phoenix workshops. Be in person. Be where the people are working. So I put this in the chat last week. I'm going to just make it right. Prioritize competence, or failure is your future. Okay. I got to go. I am really excited. I'm very when shakeups like this happen in our marketplace, in the real estate as a nation, but then also isolated throughout the country, different cities, it's exciting. It's going to shake out the amateurs. We're going to find discounts. We're going to be able to increase our net worth in a huge way. I know some of you are like, goodness, I just got into real estate. And I saw prices go from 350 to 400. So now they should go from 400 to 450. But no, they might go from 400 to 300. And you're going to have to adjust. Now, in some markets where people are still moving to, and there's still more tax-friendly local governments, people are going to be moving to. But my point is, if you are investing for appreciation, you are investing, you are gambling. You are not prioritizing competence. You are just gambling. And you know what they say? There's no trying casino. So please don't gamble. So for those of you who are, live in the chats, in the ISN, in the Facebook groups, take care of the new people. Take care of the folks who just got here. Help them answer their questions. If they're asking newbie questions, still be nice to them, spread love, but help them get focused on the classes. We can see how much you've gone through your classes, and it's enough. So prioritize competence means watch your classes. It means study. It means get serious. Prioritize your competence. Show up to these calls, the ones with Bill and with Dane, where we go into live scenario stuff. It's important, and it's going to set the difference for you. So these are recorded, and we get them uploaded onto our Team Elo YouTube channel. So check that out. And my point here is it's going to get harder, but doing it right means it's that you're dealing with less amateurs in the marketplace, and understanding short sales subject to seller financing, tax delinquencies, foreclosures, auctions. All this stuff is going to be your I want to say your weapon versus your shield, right? Your sword versus shield. It's going to make a difference for you. Okay, I got to run. You guys have been awesome. Have a wonderful day. Money Monday, another one in the history books. We'll see you guys tomorrow for Takeoff Tuesday. Have a great day. Go watch some class. Bye for now.
Thank you, Michael. Thank you, everybody.
Thank you, Michael.
Thank you.